am a lawyer, but I am not necessarily your lawyer. The materials discussed in this podcast are for informational purposes only and should not be deemed legal advice. If you have a specific legal question according to your circumstances, then I encourage you to speak with an attorney licensed in your jurisdiction. Welcome back to another edition of Ag Law Today. We've got two very special guests talking about all things insurance as it applies to farmers and agribusiness owners. And I'm going to go ahead and have them introduce themselves. We've got Andrew and Derek in the house. Let's start with Andrew. Who are you? Where are you? What do you do? And what is your involvement in insurance?
I'm Andrew Diedrich, and I'm a financial rep with Country Financial. My office is based here in Champaign, but I do travel and have clients in quite a few surrounding counties as well. I grew up on a family farm outside Pasodum, very small, just shy of 500 acres. We actively farmed up until 2015. Prior to getting started at Country, I sold John Deere equipment and serviced the GPS down in the Mattoon area. And an opportunity presented itself to change careers. And I knew I always wanted to stay involved in ag. I wasn't looking to make a change, something that did not allow me to work with farmers. And so I feel very fortunate to be with Country and still be able to visit with my farm clients every year and kind of keep my toes in what's going on in the agricultural world. So I feel very blessed in that respect.
And how long did you say that you've been with Country?
I've been here just hit my 5-year anniversary. So I got down to the U of I in 2010 and then went down and sold equipment for 6-7 years and then been with Country now for 5 years.
And Derek, how about you?
Yes, I'm a risk advisor at Danzig and Shelbyville Insurance. I'm in our Shelbyville office. So my, I guess you could say my territory is kind of south of Decatur. Go down as far south as I've been down to Carmi. My focus is more on the ag business and business in general. So I do a lot of commercial insurance, work with a lot of ag businesses. I do the commercial side of things and also the employee benefits side, which kind of ties into how I work with the life side. I have a partner in my office that does a lot of the farms, but I work closely with him to manage some of the farm accounts. Mainly focusing on risk management, and he handles the insurance side. So been in it for about 9 years now. And I kind of just stumbled into the business as far as insurance goes. I was a substitute teacher for a few years and found out pretty quick that managing a classroom full of students wasn't my cup of tea. So saw an opening at an insurance office, and 9 years later, here I am.
So even though you might have just stumbled into insurance, Derek, what has made you just really enjoy what you do and has attracted you to this industry?
Yeah. The biggest part for me is being able to be entrepreneurial. Although I am considered an employee of an agency, I am allowed to go after whatever type of business I want, as long as I'm being profitable for the agency and producing. I can go after farmers, or I can go after manufacturers, or I can do this type of insurance. It's really up to me. I can build my business the way that I want to. And I really like having the leeway to market myself to the people I want to work with.
And Andrew, how about you? What has attracted you to work in insurance?
I always enjoyed assisting people and sitting down and while I was tied in with the ag community when I was selling equipment, it's nice to kind of broaden my scope, be able to help others. Like Derek, I can also assist business owners, do some commercial insurance, life health. So every day is something different in the office, and being able to choose, kind of like he said, how I direct my business. I've made a major focus of my business to be farm and farm clients. That's just my passion. It's something I enjoy. And it's really nice that I'm able to take time out from the office and go out and see my farmers and visit. make sure that everything's up to date, because just like all industries, but ag seems to evolve even faster than many of the others in the area.
So, like many attorneys, I like all things paper and contracts. And when I think about insurance, in its simplest terms, insurance is simply a contract, and the different kinds of insurance are different kinds of contracts. And so, why don't we just talk a little bit about the different kinds of insurance that would affect farm families and agribusiness owners? Because I think oftentimes there's confusion about what things are typically covered and not in these various policies. Derek, we'll start with you. I know you mentioned commercial insurance. So what is commercial insurance, and how does it differ from other kinds of insurance?
Yeah, so commercial insurance is geared more towards the business side, and I think Andrew might do a better job of explaining the farm insurance. I know farm is kind of a mix between personal and commercial insurance, and I know Country does a really good job with that with those type of policies. So on the commercial side, more of the agribusiness side. Commercial insurance protects you as a corporation or an entity from any issues that could arise that damage your assets. So obviously, as a business, you'll have property, you'll have vehicles, you have employees, you have a liability to those you do business with. So it protects you in your normal course of business. So there's a number of things in today's world that you got to think of when you own a business. And I might hit on something that I guess I didn't really expect to do it in an ag podcast, but in today's world, in my opinion, one of the biggest issues that business owners face is cyber and data liability. Doesn't matter if you're a farmer, doesn't matter if you're a lawyer, it doesn't matter what entity you're in. Everybody in today's world faces risk associated with cyber-related crime, cyber-related hacks, breaches, that type of stuff. So I can go into further detail. Don't want to dig too deep into that unless you want me to, but there's a number of policies you can buy as a business owner that some of those are more common, your liability, property policies, but there's some others that in today's world, especially, there's a huge issue and risk associated with cyber-related incidents.
Yeah, you bring up a couple of good points. I mean, so one of the things with direct farm marketing, with, let's say, farmers who are making jams and jellies out of their kitchen and selling them at the farmers markets and things a lot. And please, either one of you, correct me if I'm wrong about this, but I think oftentimes they believe that homeowners insurance or renters insurance would protect them with that kind of commercial activity, but that's not the case. Is that right?
Typically, there's homeowners. There's some limitations in a homeowner's policy that would typically not cover a larger style business. If you're running a very small operation out of your home, you're probably okay. Now, the cyber side, probably not, but liability wise, if someone comes to your house to buy some of your products, as long as you're usually a typical homeowner policy, I think, is if you stay under 2,000 of revenue. Most businesses in today's world are going to be bigger than that. So yes, there's some limitations associated with your home-based business that you've got to be careful with. So yes, typically if you're running any type of a business, you'll want to make sure that you've got specific commercial liability coverage to cover any type of liability you've got out there.
So Andrew, how would you compare then commercial insurance to just property insurance for either a farmer or an agribusiness owner?
So it varies, and within our policy through our company, we have options to add endorsements onto a standard farm policy. So I've got some clients that sell seed. They're not large. We have an endorsement that, as long as they stay under a certain threshold of revenue, they can add a rider onto their existing farm policy to cover them. Now, kind of like Derek said, once they scale up, I do have a guy that treats his beans. He's got a bean treatment center. He's got a building he built specifically for the seed business. Now, he does have a commercial policy to cover that risk because he exceeds what our farm policy would allow him. So a lot of times it's really just having a discussion with your insurance provider of, here's how much business I do, here's what it entails, and the more details, the better, so that we're able to provide the right advice and set them up with the right type of policy. But the size is usually the biggest predictor of whether or not they need to have a separate commercial policy to cover that entity. Even though it is ag related, it is a spinoff of just the straight farm income.
Are there any special considerations that a farmer should have with property insurance if they're involved in any kind of agritourism, agritainment, having people come to their farm? One of my good friends in New York right now, they have a beer barn, and they've got pick your own pumpkins that are happening on right now. And so, what are some considerations there with the people having invitees come to their farm?
So that's something, and honestly, they probably need to speak to their attorney. Hopefully they have different entities set up. I mean, I would never want a client to run the farm or run an agritourism under the same entity, and they need separate policies. We want to divide that and keep coverage separate. Risks are different versus straight farm versus having people come, like you said, you pick pumpkin patch and things. We actually had one on our farm when I was a kid. That's what we used to do. And I know my dad went out and got a separate policy just related to that part so that it was separate from our farm.
And Derek, did you have anything to add there regarding agritourism?
No, it was funny you bring that up because my family and I just went to a pumpkin patch this weekend, and of course, Andrew, you can probably relate to this. You start to have a little insurance nerd in your brain, wondering I wonder what they got set up here because it's a farm. I mean, they're farming, but they also got a pumpkin patch. So yeah, it's definitely like Andrew said. There's different risks associated. So it's no longer just a farm operation. You've got an entirely different business that's on your premises that it's somewhat related, but thinking of a pumpkin patch, they had tractor rides and slides into a corn pit and a petting zoo, and it's a completely different operation than a typical farm. So my guess is you'd have to have some type of a commercial type policy to cover those exposures. And thinking from a risk management perspective, you'll have to have a completely different risk management strategy than you would as a typical farm operation.
So shifting to cyber insurance, Derek, I know that you mentioned that before. So I think there's a lot of confusion in this area. I mean, even me myself, I'm curious about it. There's been a lot of talk among attorneys about cyber insurance and things. Mm-hmm. What exactly is covered and what's not covered on things dealing with cyber insurance?
That's a good question. So a lot of business owners, when cyber started to become more of an issue for business owners, insurance carriers would add on an endorsement to like your general liability or what's called a BOP, a business owner policy, to cover some smaller risks associated with cyber related incidents. So it depends on what coverage form you actually buy. If you're relying on that smaller endorsement on a commercial liability policy, you probably have pretty limited coverage. Being that there's usually smaller limits, they limit the types of claims that could be covered, and then you can actually buy a cyber liability policy on its own. So that's typically for a business owner what I would recommend. So I'll just mention some of the bigger issues that business owners are running into today. One is called social engineering. And that is where a bad actor, a hacker, somehow gains access to an important person's account within the organization. So I'll say, Carrie, at your law firm, someone gains access to your email address and they email an employee of yours. And they say, hey, I need you to transfer $10,000 into this account. We're getting ready to buy some new office furniture in our Shelbyville office. Mm-hmm. So that employee says, oh, okay, Carrie told me I need to get some money in the account so we can make that purchase. They transfer 10 grand into that account. And now that 10 grand's gone because, it's went into a hacker's account and you'll never find it again. So they socially engineered a way to gain access to your funds. And it doesn't matter what type of business you're in, that can happen to anybody. If you're in any type of business, it doesn't matter if you're in manufacturing or we saw a hotel recently that got hit by something like that and lost some money. That's a situation where as a business owner, you don't think of that happening. And a lot of people think, okay, well, my bank's going to cover that. typically you need a cyber liability policy to cover that type of a risk.
So, Andrew, I know a lot of people talk about umbrella policies. I think there's a lot of confusion with umbrella policies. So can you just give a little bit of the basics and the overview about how umbrellas work?
Yeah. So umbrellas are especially important on the farm side. I mean, we're dealing with land, and the value of land just continues to climb. So, I mean, 80 acres, that's net worth $1 million right there anymore. Your farm policy, so an umbrella goes over, kind of like an umbrella, over everything. So you've got your farm policy, and then most likely you've got your auto policy. And you have your stated limits. Most farms are going to be $1 million liability. Most autos, at least I recommend farm clients, are $1 million, which is the most we can possibly do. And then an umbrella comes in over the top. And the umbrella really only comes into play once you exceed the liability of the base policy. So in an auto accident, whatever their limit is, once they've exhausted that, the umbrella kicks in and provides that extra coverage of liability. Same on the farm. And something I talk to, especially my farmers with young drivers, we need to make sure to have their vehicles listed, because while it's not mom or dad, if something were to happen, the farm assets are now open for a lawsuit and potential loss. So having the umbrella in over them, young drivers provide a greater risk of accidents than, say, an older person. So it's very important to make sure we have those in place. Umbrella, as far as determining the amount, an old way of thinking was always you should at least have liability coverage up to your current net worth. So even somebody that doesn't own much ground yet, we always want to see them at least have an additional $1 million of umbrella to protect them if something were to happen.
So to press you on that, because to go backwards, how I look at an umbrella, and by the way, I think umbrella insurance is a terrible name, because I think that people believe that an umbrella is going to just protect them from all the rain and things that can happen wrong. But in fact, it's more like a top hat. Like, it raises your limits in whatever it is that's covered. So anything that's not covered is still under the umbrella, not covered. Is that an accurate analogy there?
Yeah, so your umbrella mainly provides liability insurance. So that is injury to other people, or they feel that you were at fault and they decide to sue you and pursue financial gain from that. So the umbrella provides the additional coverage for the liability. It doesn't necessarily provide more coverage for, say, your equipment that's covered under your farm policy. The umbrella is just strictly the liability side. So it's your risk of other people being injured as a result of something you did or maybe did not do.
How does somebody understand then? And I think I love the general rule of thumb. I mean, that's sort of what I tell people too, is like, what is your net worth? But talk to your insurance provider. How do they know what the limit should be in the underlying policy versus how much for the umbrella?
Yeah, I've taken the approach with all of my clients that we ought to, on the base policy, we ought to do the most possible. It's very, very inexpensive to raise your liability. A little bit more on the auto, but on the auto coverage, it does increase your uninsured, underinsured, and that's actually coverage for the client and anyone with them. So all of my farm clients carry the maximum under the underlying policies as well. So it's $1 million on the farm, and maybe they have a 1, 2, 3, 4, 5 million umbrella on top of that.
And Derek, is that sort of your take on umbrella insurance?
Yeah, absolutely. So, like Andrew said, there's, of course, we're an independent agency, so we work with a number of different carriers, and each one has a different requirement for the umbrella. So the underlying, they may say your auto has to have 250, 500 to qualify for the umbrella. Some say 100, 300. So it's kind of we have to play a unique game to figure out how we can get that umbrella and qualify for it. An easy answer is just to max out the underlying liability. And for, like Andrew said, for the money, it's well worth the protection plus the umbrella on top. So an umbrella can do a number of things to protect you. And like Andrew said, it's just that catastrophic safety net. If the worst of the worst happen liability wise, it's there to protect you financially.
Before we start talking a little bit about life insurance, are there any other big kinds of insurance that would apply to farmers that are selling food products direct to the consumer that might help them if there's any kind of food safety concerns?
As far as, I'll let Andrew hit on the farm side of it, but on a commercial side, typically your general liability policy if it causes some type of bodily injury, let's say someone gets sick because of the food that you give them, typically your general liability will respond to that because it's a bodily injury issue. Your general liability picks up bodily injury and property damage to a third party. So usually in that situation, it's restaurants typically all have general liability. Most small businesses and any business in general has general liability. And if you don't, you should. But that would probably pick up any type of food-related illness associated with your business.
Andrew, do you have anything to add there?
Yeah, as far as on the farm side, when somebody's doing something like that, like selling jams or something like that directly to the public, I always recommend that they go ahead and just separate that entity and have a standalone commercial product policy in force to cover that. It just gets a little bit confusing when you combine it with the farm. It might save you a little bit on the premium, but if the worst happens, in my view, it's always better to have that separate commercial policy in place to cover that portion of the business.
Let's talk about life insurance, which is a very different kind of mechanism there. So Derek, in its simplest terms, what is life insurance and how do you think that farm families should be considering using life insurance in their own estate plan?
So life insurance is basically insurance that insures an individual's life. So you can use it in a number of ways. There's only one type of claim that you can have with life insurance, and we all know what that would be. So if someone passes away, they can set up life insurance for a number of reasons. Especially on the farm side, you can get pretty creative with how you use life insurance. So one way, and this isn't just for farmers, it's for any type of business owner that may have a business partner or have a way that they want to structure passing on their business. One thing I always recommend anybody that's in an ownership role is to have some type of a buy-sell agreement in place. So Carrie, I don't know if that's something you do on your side is structure those buy-sell agreements. But what that is it's a written or pre-agreed upon contract where it explains how the business is going to be perpetuated after the untimely death of an owner. So let's say I was trying to think before we hopped on. I've got a really good example, not farm related, but you can put it into it could be a farm related business as well. There's 4 brothers. I married into a family who owns a business for 60 years, and there's 4 brothers who are equal shareholders in the business. If one of those brothers passed away, had an untimely death, not expected, the individual who passed away, their spouse now becomes the owner of that business. Now, I'll say I love my mother-in-law, but I don't think that my uncles-in-law would like to have my mother-in-law as a business owner with them. So what a buy-sell agreement does is it explains how at the time of death the business will be arranged so that the business absorbs those shares and makes whole the spouse or whoever the other shares were left to. And life insurance is a way that you can fund that buy-sell agreement to make sure that you can make that spouse whole or whoever it happens to be upon the untimely death of one of the shareholders.
So how does that work exactly with the life insurance? So then would the 3 brothers in that scenario then be the beneficiaries of the life insurance?
Correct. So, or the business in general would be the beneficiary, and they use that money to buy the shares that were left behind from the owner that passed away.
So in order to determine how much insurance there should there be some kind of a business valuation to value those shares?
Yes, absolutely. You'd want to make sure that you'd have to do a little bit of an analysis to figure out what the business is worth. If you were going to sell it to someone, what would you sell it to them for? And you're able to come up with an idea of how much life insurance you should put on each owner. So yes, you definitely probably want to work with an attorney to figure out what the valuation is. An insurance guy is probably not going to be the right guy to say, I think your business is worth $5 million, because we rely on people who have a little knowledge to do that. But then you come to us and we were able to arrange the life insurance structure. So you're able to use the life insurance to make sure that the business or the shares are absorbed by the business instead of the spouse, and the spouse is still made whole by that life insurance value.
So, Andrew, could you just discuss a little bit about the difference between whole life insurance and term life insurance? I know there's sometimes some confusion here, but how could a farm family use one or both of those kinds of life insurance?
Yeah. So generally with farm clients, what we'll see is a large mix of both whole life and term insurance. Term insurance is for a set number of years, most of the time 10, 15, 20, 30 years of coverage. If you were to die during that time, the insurance company would pay out the stated amount of the life insurance policy. Whole life is a little more complex. It is what we refer to as permanent insurance. As long as you continue to make the premium payments, the policy will stay in force. It also continues to grow and buy more paid up insurance and also accrue cash value. Many farm clients have quite a bit of whole life insurance. Another thing to think about, the banks will require, especially young farmers, maybe buying their first 40 or their first 80, the banks will generally require they have at least enough term insurance to cover the amount of that loan. They'll also generally want to have enough that if they were to pass untimely, there's enough that their spouse could pay off all the debts and not lose the farm, and maybe the farm could continue. And then when we start talking about estate planning and that's where the whole life or a second to die life insurance policy becomes a much better fit than a straight term policy.
So to piggyback on our conversation earlier about how much insurance should you have, I mean, how much term life insurance should a family consider?
So there's lots of different ways to figure that out. A big thing is to look at the outstanding liabilities. So to take a snapshot of today, if you were to pass away, what are your debts? Do you have land debt, equipment debt? Do you still have a mortgage on the house? And then also looking at future income, because maybe your spouse is not going to carry on the farm. What is your income? And a lot of times it factors into, if you have children, how old are they? How many years do you need to have income to make sure that your children can get through at least till they're 18? And a lot of people do want to have something set aside for higher education costs to help cover that. So it's really kind of an in-depth, it's a case-by-case situation. Kind of sit down. I have a spreadsheet that we kind of work through. Clients will kind of fill out, and then we'll go from there as far as determining the right amount of insurance for them.
Derek, did you have anything to add just in terms of how much insurance, families should consider?
No, I would agree with Andrew. When I first got in the business, someone taught me a quirky little exercise that helps people back into the amount they want to buy. This is more for an individual, but you spell out life, L-I-F-E. Now I got to remember what it means. So L is liability, so your debts, any outstanding debts that you have. I is for income. How do you replace the income of the individual that passes away? F is for final expense, so the cost to bury someone. And E is for education, or anything that you want to leave behind for those that you maybe your kids or grandkids, if you want to pay for college, or you want to pay for something once you're gone. That's what the E stands for. So then you total those up and you come up with a roundabout number of where you could how much life insurance you could buy to actually pay for what you want to pay for upon your death.
So I don't know if you guys know this, but I do a lot of family law, and one of my passions in life is prenuptial agreements. And so I'm oftentimes negotiating life insurance actually in prenuptial agreements. A lot of people think that prenups are only about what happens if you get divorced, but there are provisions in a prenuptial agreement that affect the marriage itself, specifically estate rights and an opportunity to negotiate life insurance. And so, I mean, I agree with what you guys said. I mean, these are things that I touch upon, when I'm thinking about, promises to have life insurance, at least to the any kind of marital debt, that's there. And for myself, I'm an heir to a farm. And my parents have life insurance to cover the farm debt. So if something would happen to them, my brother and I could then go to the bank and pay off the farm, which is really puts me at ease, and so I think it's something for farm families to really consider. So let's talk about long-term care insurance. So Derek, how can long-term care insurance be used in a farming operation? What is long-term care insurance?
So long-term care, obviously, in today's world, people are living longer than they have ever before. And as you get to a certain age, you may have issues with your health where you require care beyond, being able to take care of yourself. So long-term care can help offset the cost associated with those some of those expenses you might have while you're still living, but you need some additional care. So long-term care can get very expensive. And on a farm side, obviously you don't want to have to sell off ground or equipment to pay for those expenses while you're still living. If you're wanting to pass on that farm to, your children or someone else, you want to make sure that you're not depleting your assets before you give it to them, So long-term care can be used to protect your operation that you want to leave behind. So you're not using your assets to pay for, I won't say end of life care, but those expenses that can accrue very quickly if you have those needs when you're at a certain age.
Andrew, one of the questions that I'm often faced with, like if I'm talking about farm, estate, and succession planning, are questions about the estate tax. And I'm curious on how life insurance could be used for families in their estate plan, or specifically if they're worried about the estate tax.
Yeah, that's one of the biggest uses for life insurance. I mean, right now, at least through 2025, the exemption is more than doubled. So a married couple, I believe this year is just shy of 22.5 million. Now, there are a lot of family farms in the state of Illinois that are well under that threshold. Now, they do have to factor in that is everything in their estate. That's not just the land they own. It is everything. But even those that are under that, the state of Illinois comes in and there are state estate taxes, and that is capped at $4 million. So, right now, currently, there's quite a few farms that are under the exemption federally, but they are going to be looking at state of Illinois tax. And I believe the tax rate starts at 37 or 40% on that. So they can eat up quite a bit of money when we're looking at the estate on the state level even. The other thing is, depending on what's going on in the political world, the exemption being doubled does sunset at 2025. We don't know if we'll see it extended. If it doesn't, it'll fall back to 11 million. So there's quite a few farms that will be affected by that. And life insurance, we can set up a policy that is on, usually what we're talking about here is a second to die policy. So it's taken out jointly on both husband and wife. The first spouse that passes, there is no payout. It would be at the time of the second death, the insurance policy would pay out. And something very, very important when setting these up is the ownership of that policy. The insureds are generally the primary husband, wife that have the farm, but looking to set up an irrevocable life insurance trust or an ILIT in order to get the value of the life insurance out of the estate. Because if it's owned by the individual at the time of their death, that life insurance goes into their estate and actually increases their taxable amount. So it may end up actually costing them more money. So it's very important when we're looking at that to have an attorney involved and have that ILIT set up so that we can keep that life insurance policy out of the estate.
So we're about a year and a half into COVID at the time that we are recording this podcast. And if I ever meet COVID in a dark alley, there's some not so nice things I would say to COVID, but there have also been a few silver linings. So I'm curious, Derek, what has been the biggest silver lining to you? And then we'll go to you, Andrew.
this is not associated with life insurance, right? Just in general.
Just in general, yeah.
Okay. For me, it's being able to. I've identified that I can be way more efficient by using technology. So pre-COVID, of course, I still do like to meet people in person. I like to shake hands and talk to them face to face. Obviously, especially at the peak of the pandemic, that wasn't allowed to happen. And so I've figured out how to use video and other means of communication to be more effective and efficient in my approach. And honestly, it has impacted my business in a very positive way, mainly because it was more accepted by other people. Used to be where, okay, let's have a quick meeting about it. Now I can say, hey, I'm going to record a 5-minute video and explain this, and I'll send it over to you. So it's helped me become way more efficient, which is a good and bad, because now I can take on more tasks, but I feel like my checklist is growing, but you can get through those a little quicker than you used to pre-pandemic.
Andrew, how about you?
I would say I'd piggyback with Derek. I mean, COVID completely changed the way we do business. I'm very similar. I always like to have clients come in and talk. I mean, during COVID, we had to find a way to do that. I never liked phone calls, so we got into Zoom meetings and Teams meetings. And especially with farmers, they're very busy, or business owning clients. I mean, it's very difficult to have both husband and wife available to come in, even staying late after hours. They have children, they have to worry about childcare. I was able to run quite a few appointments via Zoom in the evening after they were home. People were more comfortable in their own home. So it's really changed the dynamic of how we do business, and at least we're able to offer it to suit what the client prefers how they prefer to interact with, whether it be in person or Zoom meetings and phone calls. So it's definitely changed the business landscape for sure.
So in close, and Andrew, we'll start with you. Where can people find you? What's your contact information? Do you have any social media handles that you want to share?
Yeah, so I have a website through Country Financial. If you go out and Google my name, my office is here in Champaign. We're on the corner of State and Springfield Avenue, just a couple blocks west of Neal Street. And I do travel quite a bit. Like I said, I have clients in multiple surrounding counties. So I do work out of my pickup truck some. I am able to go meet clients. You can reach my office here at 217-359-3941. And my email address is just simply my name, Andrew.Diedrich at Country Financial. That's another great way to get in touch with me.
And Derek, how about you?
Yes, I spend a lot of time on LinkedIn. So you can find me. It's just Derek Hayden, CIC, I think, is at the end of my name. On LinkedIn, that's where I connect with most people socially, social media wise. I also do Facebook and Instagram. I use those periodically. Email is Derek, it's DEREKH at ShelbyvilleINS.com. And our office number is 217-774-2155.
And you also have a YouTube channel and a podcast, right?
Yes, correct. So you can find me on YouTube, and I think it's Derek Hayden Risk Advisor on YouTube. And our podcast is called the Central Illinois Business Leaders Podcast. So we try to interview people in the area that have done a good job of growing their business, try to get some tips and tactics for other business owners to use, and really just spotlight some of the leaders in our area.
Excellent. Well, I so appreciate both of you taking the time to speak about insurance. So I know that it's so important for farm families to consider and get their head wrapped around, on a regular basis here. So thanks again.
Awesome. Thanks, Carrie.
Yeah, thank you, Carrie.